Welcome. Thank you for being here with me today. My name is Eric Hagan. I am a financial advisor and I am president of the independent wealth management firm Capital Consulting Group. Today, we're going to talk about savvy Social Security planning, what baby boomers need to know to maximize their retirement income. If you are eligible to take Social Security, but you haven't yet, or if you are within a few years of being eligible, then you are in the right place. You see, when your parents retired, they probably didn't think too much about Social Security. They just went down to their local office as soon as they turned 65 or maybe 62 if they retired early and applied for benefits. They took their benefits for granted and did not ask very many questions. But baby boomers are approaching the Social Security question in a very different way. Most people tend to minimize the value of Social Security. If they understand that they are likely to get something back from the system at all, they think that it will be a minimal amount, not really enough to count on. But Social Security is far more valuable than most people realize. First, Social Security is one of the few sources of income you cannot outlive. If you are worried about running out of personal assets in your older age, you need not have that fear with Social Security because it continues until you die. And of course, the longer you live, the more you will extract from the system. If your benefit starts out at $2,000 a month, and if you live 10 more years, you will receive nearly $300,000 in lifetime benefits. If you live 20 more years, you'll receive over $600,000 in lifetime benefits. And if you live 30 more years, you'll receive over $1 million over your lifetime. Now, this assumes annual cost of living adjustments or COLAs of just 2%. Second, Social Security offers annual inflation adjustments. So if your benefit starts out at $2,000 per month, and if annual COLAs are 2%, in 10 years, you'll be receiving $2,438 per month. In 20 years, your benefit will be $2,972 per month. And in 30 years, your check will be $3,623. Now, there's no way of knowing exactly what future COLAs will be, but 2% seems to be a reasonable estimate. When your Social Security benefit is calculated, it will be based on how much you earned over your working career and the age at which you apply for benefits. The formula for calculating Social Security is pretty complex. You may or may not want to follow along with this. Some people find the formula interesting. In a moment, I will show you a couple of ways to estimate your own benefit. The general process goes like this. First, Social Security looks at your annual earnings over your entire lifetime, indexes them for inflation, and picks the 35 highest years' earnings to include in the formula. The indexed earnings are totaled and divided by 35 to come up with an average. If you don't have 35 years of earnings, the missing years will be filled with zeros. Next, a formula is applied to your average indexed monthly earnings to determine your primary insurance amount. This is the amount you will receive when you reach full retirement age. Each year, annual COLAs are applied to your benefit to help you keep up with the cost of living. Here's an example of how the benefit formula would work for a baby boomer who was born in 1961 and who earned the Social Security maximum every year since since the age of 22. His average indexed monthly earnings would work out to be $12,427. In calculating his primary insurance amount, the first $1,115 would be multiplied by 90%. The amount between $1,115 and $6,721, or $5,606, would be multiplied by 32%, and the amount over $6,721, or 5706, would be multiplied by 15%. These amounts would be totaled to come up with a PIA of $3,653.30. This is the amount the worker would receive at full retirement age. I told you this was complicated. Fortunately, you don't have to figure this out yourself. Full retirement age is the age at which you can claim full, unreduced benefits. It used to be 65 for everyone, but now we're seeing a higher full retirement age being phased in as a result of the 1983 amendments. For everyone born between 1943 and 1954, full retirement age is 66. For everyone born in 1960 and later, full retirement age is 67. For those born in 1955 through 1959, full retirement age is 66 plus some number of months. Now, remember that I said that your primary insurance amount, or PIA, is the benefit you will receive at full retirement age. So what happens if you apply for Social Security before full retirement age? Well, your benefit will be reduced. You will receive a percentage of your PIA depending on when you apply. If your full retirement age is 66 and you apply at age 62, you will receive 75% of your PIA. At 63, 80%, and so on. If your full retirement age is 67 and you apply at 62, you will receive 70% of your PIA. These amounts are actually prorated monthly, so you can apply any time after the age of 62, and your benefit will be reduced by the appropriate amount. If you apply for Social Security after full retirement age, you will earn delayed credits of 8% for each year that you delay. So if your full retirement age is 66 and you apply at 67, your benefit will be 108% of your PIA. At 68, it will be 116%, and so on. After age 70, you cannot earn any more delayed credits, so it does not pay to wait until after age 70 to apply for Social Security. I'm guessing you're probably not too interested in calculating by hand your AIME and your PIA and the reductions in credits for early or late filing, or the annual COLAs that could raise your benefit in the future. So you can find out approximately how much you can expect to receive in benefits in one of several ways. One, you can refer to your annual Social Security statement. These are now available online at socialsecurity.gov/myaccount. You'll need to set up an account by answering a number of security questions. Two, you can use the retirement estimator on your Social Security account. This calculator taps into your specific earnings history after you enter your personal identifying information, including your birth date, Social Security number, and your mother's maiden name. Don't worry, the site is secure. Please note that the annual statement and the retirement estimator do not factor COLAs into your age 70 benefit. This means your actual benefit will likely be higher than they indicate. But our calculators do adjust for COLAs, so if you know your PIA, we can help you project your future benefits. You also might try one of the 3 calculators on the Social Security website at ssa.gov/planners/benefit calculators. Feel free to browse around the site and play with those calculators. The decision of when to apply for benefits is one of the most important and most complicated questions. It can literally make the difference of thousands of dollars over your lifetime. Before we get into the number crunching, it's important to realize that the decision of when to apply for Social Security depends on many factors unique to your situation. These include your health status, your life expectancy, your need for income, whether or not you plan to work, and if you are a surviving spouse, whether you have other personal resources. The when to apply question is very complex and really requires a customized analysis. But here are a few points to remember. If you apply early, your benefit starts out at some fraction of your PIA, 75%, 80%, what have you, and remains at that percentage for the rest of your life. It does not go up to 100% when you reach full retirement age. COLAs magnify the impact of early or delayed retirement because the annual cost of living adjustment is applied to either the lower or higher amount. This causes the disparity to increase with each passing year. The when to apply question impacts survivor benefits as well. High earning spouses are therefore encouraged to delay benefits to age 70 because that will give their surviving spouses the highest benefit after they die. Let's look at some strategies for maximizing benefits. The first thing that you can do while you still have time is improve your earnings record. First, check your annual statement to make sure your earnings record is accurate. Mistakes are rare because the earnings kept on file at Social Security were reported by employers when they submitted your Social Security taxes. But mistakes can happen, especially for self employed individuals whose earnings records are taken from tax returns. The next thing is to consider how you might be able to improve your earnings record. If you do not have 35 years of earnings, can you work a few more years so that they will not be filled in with zeros? If you had several years of low earnings early in your career, can you work a few more years now while you are in your peak earnings years so those low earning years will be replaced with high earnings ones? Even if you start receiving Social Security and continue to work, your earnings record will be updated. However, it's important to note that if you start receiving Social Security before reaching full retirement age, and if you earn over $21,240 a year, $1 in benefits will be withheld for every $2 you earn over that threshold amount. Strategy number two for maximizing Social Security is to apply for benefits at the optimal time. We've been making a case today for delaying benefits because that will result in the highest lifetime benefit for you and your surviving spouse. But there is no one size fits all answer to this question. The important thing is to apply at the time that is optimal for you. One important consideration in deciding when to apply for benefits is whether or not you plan to work. If you apply before you turn full retirement age and you earn more than $21,240 in 2023, a dollar in benefits will be withheld for every $2 you earn over that $21,240. Now, it's important to know that this money is not truly taken away. Rather, your benefit will be adjusted upward when you turn full retirement age to make it as if you had applied later. This means that if some of your benefits are withheld due to the earnings test, your new benefit will be higher as if you had started at 63 or 64 or 65 instead of at 62. So please don't let the annual earnings test discourage you from working. The more money you earn, the more money you will have. Social Security does not penalize you for working. Once the adjustment is made, you will end up with a higher benefit for the rest of your life. And of course, the earnings themselves will contribute to your financial well being. To avoid the earnings test entirely, just wait until your full retirement age or later to apply for benefits. Strategy number three for maximizing your benefits is to coordinate spousal benefits. The goal is to maximize income for both of you while you're alive and maximize income for the survivor after one of you passes away. It can be quite complicated, but by understanding all of the considerations and doing some calculations, it is possible for married couples to come up with the right solution for their needs. Did you know that part of your Social Security benefits may be taxable? So, strategy number 4 for maximizing your benefits is to minimize this tax. You can minimize taxes on Social Security by lowering your other income, especially investment income. But you should be aware that municipal bond interest, which is usually tax free, counts as income for the purpose of calculating the tax on Social Security benefits. Anticipate the required minimum distributions from your IRA, which may cause you to be in a higher tax bracket and may cause some of your Social Security benefits to be taxable. Consider drawing down IRAs before age 73. Consider converting a traditional IRA to a Roth IRA, which generates tax-free income. Delay Social Security in order to reduce the number of years benefits are subject to tax. Reduce your expenses, pay down debt, and adopt a simpler lifestyle so you can make do with less income. And continue to manage taxes throughout retirement, not just the first few years. And as always, of course, please consult with your own tax advisor about your personal and individual situation. Strategy number 5 for maximizing Social Security benefits is to coordinate Social Security with your overall retirement income plan. It's important to consider Social Security in the context of your other retirement resources, including pensions, IRAs, 401ks, the required minimum distributions that you'll be needing to take at age 73, your overall investment portfolio, and your plans for working in retirement. All of these resources should be coordinated to give you the income you need for the rest of your life. And please don't be afraid to ask for help. Retirement planning is easy when it's a matter of stashing part of your salary into a 401k or an IRA. But when the time comes for you to convert your nest egg into an income stream, you want to make sure it does not run out. Social Security may be the bedrock of your retirement income plan, but it must be coordinated with your other resources to give you the stability and security that you deserve. We've covered a lot of ground today, but you probably still have questions. When should you apply for Social Security? What if you want to keep working? What if you've already applied? How much will your benefits be? How can you coordinate spousal benefits? What's the best long-term strategy for your situation? What should you do next? We would be glad to help you consider each of these questions individually and help you come up with a plan for your personal situation. Social Security is too important for guesswork, and we would love to help you protect your nest egg and maximize your income in retirement. The best way that we can do that is to complete a custom Social Security analysis for you or for you and your spouse. What we'll do is we'll run a series of maximization scenarios to help you identify your best claiming strategy, whether you're single, married, divorced, or widowed. So that is my personal invitation to you to either meet in person or online via Zoom and have us run a customized Social Security analysis for you. In this analysis, you'll see different scenarios, such as if you take your income early, if you wait, which way gets you the most, which way gets you the least, how much you can expect, and more. It is not uncommon to find out the difference between the scenario that gets you the most and the scenario that gets you the least can be $350,000 or more in lifetime benefits. So, in order to set this up, what I need you to do is to visit my scheduling page online. At this page, you'll be able to select a time that's convenient for you when we can connect. I'll put a link in the chat box so that you can just click on it. In fact, let me do that right now. put a link in the chat box. You can just click on that link and it will take you right to that page. Depending on where you're watching this, there could also be a button either below this video or maybe next to this video as well. But again, the Social Security address there is www.investwithccg.com/SS analysis. For those of you who need even more incentive to take the time to schedule something today, to just get on the calendar, if you do schedule today, not only will you get that customized analysis, but I will also have for you this hard copy Baby Boomers Guide to Social Security, a wonderful resource for those of you looking forward to turning on your Social Security income. I will also have this quick reference guide called the Social Security Quick Reference Guide for 2023. Right here, very handy guide to have at your disposal there as you're making these decisions. And then, and of course, like I said, that customized Social Security analysis as well. So hopefully that's some extra incentive for you to take action, just schedule an appointment, get on the calendar, make the most of your financial future. So that is it for today. Head on over to the website, schedule your complimentary meeting. We can meet at my office here in Eden Prairie. We're located in the northeast corner of Eden Prairie, near 169 and Highway 62 for those of you here in the Twin Cities area. This is our education room where we do a number of different live in-person events. Here's our planning room where we kind of roll up our sleeves, get to work. So again, we can meet here at my office in Eden Prairie, or we can meet virtually using Zoom, again, whichever is the most convenient for you. If you have questions, if you're like many people who see this presentation and have more questions now than perhaps when we started, be sure to bring those questions with you to our meeting. So with that, thank you for your time and attention today. I sincerely hope that you found value in today's message, and I look forward to meeting with each of you all very, very soon. Thanks, everybody.